Man, this is bad. Quite bad. You won't believe what happened to FuboTV. They not only reported the results for the last quarter, and if you read the press release, you see that the revenue was lower than what the analysts expected, what the market expected. Okay, this is acceptable. You can get over it. But then, if you read further, you see segment by segment what they reported. North America total revenue was up 3.5%. This is good. But then, the most important indicator about Fubo is paid subscribers, the number of paid subscribers, which was 1.47 million, down 2.7% year over year. And this is quite bad. When you see something like this, you have to wonder if the business model of FuboTV is still sustainable. Then, they also reported the revenue and number of subscribers for the rest of the world. Revenue down 0.4%, okay. But again, the number of paid subscribers down 10.9% year over year. And this is not what you want to see with FuboTV, with the streaming platform. Moreover, this is not all. They also provided some guidance. And when you read this guidance, you better close your eyes. Don't read it. Because for the next quarter, second quarter 2025, the revenue is expected to be about 340 million, 350 million. A decline of 10% year over year. Okay. This is not that bad. But, as I said, the most important indicator is the number of paid subscribers. And if you look at it, they expect a decline of 14% year over year. The number of paid subscribers to drop to 1.2 million from 1.47 million. So they expect the number of paid subscribers, North America, the highest revenue for them, to drop by 14%. And this is bad, quite bad. And for the rest of the world, they expect another decline in their revenue, around 15% year over year. And another big surprise, the number of paid subscribers to drop by 17%. So what the hell are you doing? With this company right now? You get in or out? Well, there is still hope for FuboTV. If you watch my past videos, you know what I'm going to talk about. First, there are also some good news. They succeeded to improve their operations. Net income, an increase of 188 million. They reported a profit over 100 million. Earnings per share up. This is good. Compared to last year, they had a loss of 56 million. Net provided by operating activities was up 161 million. And this is good. And their free cash flow has improved. They still have a decline of 62 million, minus 62 million, but an improvement of 9.3 million year over year. And they still have 327 million in cash. Compare this with the current market cap, 826 million. It's good, quite good. They have money to fund their operations. But what do you do with those declining paid subscribers? What do you do? Because this is the most important indicator. If their paid subscribers goes down, future revenue and profits go down. So what's the solution with this company? Get in or out? Well, there is still a hope for FuboTV. And that is regarding their agreement between Fubo and Disney company. The CEO said that they remain excited about this agreement, this deal, and has potential to increase competition and consumer choice in the pay TV space. They continue to work through the regulatory process and look forward to sharing more information when they are able. Now, why this is important? Their deal with Walt Disney Company. Because if they combine their companies, Hulu plus Live TV plus Fubo, the number of subscribers will increase and also the content on that platform. The new platform will become much valuable to consumers and they are likely to stay with that platform, to have sticky paid subscribers and no longer see decline like this, but a small increase, and maybe they can expand more in the future. Especially as they are backed by Disney, they can get more content at cheaper prices. But again, here, you have to understand the deal and see the terms, because they didn't release all the terms, all the information. They just want to combine those two companies, three companies, FuboTV, Live TV, and FuboTV. Disney will have a stake of about 70%. Let me show you here. Here, Disney will own 70% of the new company, and Fubo shareholders will own 30%. Still, if you value this company based on those stakes, FuboTV right now is undervalued. You can get in. But again, you have to be aware if this deal gets through, if they don't face other problems. If they get regulatory approval, you can have a double from this level. But if the deal fails, you are down. The stock price can go down to $1.5. And this is the main risk with this company. That's why it's quite important when to get in and out of this investment. Because you can have an increase like this in just a few months, 3x, but then a decline like this. So you have to be very careful. That's why this deal is the only hope for FuboTV that I see for the moment. Of course, they can find other opportunities, but for the moment, Disney deal is their bigger chance to succeed in the future, to have an increase like this in the next years. And you have to understand how they are going to do that. Because how much Disney will pay for FuboTV, if they pay something, because here you have a merger between Hulu, Live TV, and FuboTV. And you don't know exactly if this is a stock for stock merger. This means you get shares in the new company, or cash mergers. This means shareholders, Fubo shareholders, get some cash, and that will be great for you. Or it's a combination, cash and stock mergers, and you get some cash and also shares in the new company. You don't know for sure that. What they report is that Disney will own 70% stake on the new company, which will be called also Fubo. But you don't know how much money you are going to take. Either way, if you go with cash or stock for stock, you still get some value. You can have a double. If you read my entire report, you'll find out how much you can get in both cases. Now, the important thing, as I said, is if the deal gets through. Another problem is you don't know how much you are going to make. 2x or 3x from this level. You may have 4x, of course. The stock price can go to more than $5. But you don't know for sure. If you have a double, a triple, or a quadruple, you don't know for sure that. For sure, if the deal gets through, you have a double. This is for sure. But if the deal doesn't get through, this is the price that FuboTV will go. $1.6 and even less if they continue to report a decline in the number of paid subscribers. So that's why it is quite important to know when to get in and out. That's why if you want to know the exact price I'll pay for FuboTV, you can join my membership. Go to my profile, press join, and choose the level you want. In this case, Spartan Investor, where you have access to my private video about Fubo, the exact price I pay, and of course the valuation. And if you want more, to have access to my portfolio and ongoing investing course, you can join my Titan Investors. By the way, on top of this, I also offer an exclusive 1-hour coaching call with me. You ask me about FuboTV or other companies you want, and you can have a discussion. I share my screen, you share your screen, and we collaborate together. So that's it for this video, and if you have other questions, please let me know in the comments.